afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets are witnessing a pullback as geopolitical tensions rise. The Nifty trades below the 12,250 mark and the volatility index too has seen a spike. The rising geopolitical tensions has led to a surge in oil prices. Brent crude trade at its highest level since May last year. Weakness across asset classes has rubbed off on the rupee as well. The currency has fallen to its lowest level in a month. And Nifty IT and Nifty Pharma are the only two sectoral indices trading with gains today, indicating a defensive bent for the markets. Good afternoon, Neeraj. Well, it's clearly the geopolitical tensions which is weighing not just on our markets. We saw that for the other Asian markets as well in the morning.
Yeah, and other asset classes too, Navneet. Good afternoon to you. I'm clearly showing the excitement of yesterday getting completely quelled down in today's session. So the Nifty 50 down about 0.5%. The banks have taken the biggest knock today. Almost everything related to financials is down and out, 1.21% lower. And frankly, as much as we look at the heat map of the Nifty 50 and the market breadth too in the session today, because by the way, I think the small cap index is relatively maybe on a better footing, and we'll get to that in a bit. But just very quickly, look at this. The losers today, overwhelming sense of red and a clutch of names. So Z's corrected another 4.5% in the session today. iShare corrects another 2% today after weak numbers. But look at banks. SBI, Axis Bank, HDFC Bank, other financial names. Bajaj Finserv, for example, is down about 2.5% or 1.5% as well. There's weakness in Bajaj Finance, down about 1%. HDFC is down. So financials across the board have weakness, and IT across the board seems to be having some strength. HCL Tech is now up about 2% in trade, the top gainer. But TCS, Infosys, Tech Mahindra, etc., all of them are doing reasonably okay for themselves. If you can just pull up the market breadth first and the Bank Nifty MRR later before we just get to the other indices. This is the market breadth. It stayed in the positive because the small cap index is still doing reasonably okay. But the Bank Nifty has a lot of pain on itself, and that is the key culprit in the session today. So very quickly, first the Bank Nifty, save for Yes Bank, and that's funny. Almost everything else is in the red. And then very quickly, just the mid cap index that I want to talk about, because the mid caps and the small caps have some gains to themselves. Will come up on your screen. This is the mid cap index. The GMR 4.5% higher. Then a slew of very lackluster gains. But the losses, some names like LIC Housing Finance, RBL Bank looking weak. And on the small cap side as well, you will see some gains to specific stocks which would have done well. Oil sensitives or otherwise which would have not have done well. But Suzlon under exclusive, but Indiabulls Real Estate continuing 5%. But otherwise, not too many stocks which are really moving around. Navneet, I must say, the oil sensitives though have reacted. On the cash side, you're seeing SpiceJet down about 5%. I'm guessing on the future side as well, some of them might be reacting.
Yeah, Neeraj, we've been talking about how the pain companies have also not been performing in the recent past. And of course, this will be a negative for them as well. But talking about the derivatives market, considering we have seen a cut of about 0.5%. Remember, so far for the day, Nifty has defended the mark of 12,200, which is a support, and the premiums have come off quite significantly. Remember, on last Friday, premium was somewhere about 75 points. In a week's time, premium has fallen quite significantly. Pull up Bank Nifty and check whether there are any fresh build-up or not. So the futures premium on Nifty Bank is also fallen by almost 100 points on week basis, and there is significant amount of OI build-up that you can see on your screen. Nearly 19% OI build-up for Bank Nifty futures, indicating maybe at these levels there are some fresh short positions being taken. Remember, in the morning we breached the first support of 32,200 on Nifty Bank, and now we are trading around the other support, which is at the 32,000 mark. Volatility has spiked, and how? 12.5, and this is owing to the geopolitical tensions. 8.5%, 12.5 is the level. Remember, it's bounced from those levels of 10.5 to now 12.5. In terms of options data, call writing seems to be back in the system. So you've got strikes like 12,250, which has added about 12 lakh shares, and the premium is somewhere about 43 points. This is telling you the writer of this strike is safe till the time index moves towards the mark of 12,300, which has been a big resistance for a really long time. And even you've got the 12,300 call, which has witnessed fresh writing. 10 lakh shares have been added there. But a point to be noted is the 12,200 put, which is already sitting with maximum open interest, even in a weak market like today's. We have seen additional 6 lakh shares being added there. So the bulls will look to defend this mark. Let's see if we can defend. If yes, then the 20 DMA becomes very, very important, which is at 12,100 thereabouts. Individual stock futures outperforming today, or rather bucking the trend, is the IT space, and NIT Tech being within that pack has witnessed both price as well as open interest action. So long position seen there. Last year, the stock gained 38%, and today it's also gained on good amount of volumes on the cash side. As you can see on your screen, the white line projecting today's volume vis-a-vis the average volume of last 20 session. Neeraj was talking about Z Entertainment, which is your top loser on Nifty. The stock's down about nearly 5%. It's also fallen below its 50 DMA with that fall. And on the futures side, there is fresh short build-up which has come up for this stock. And finally, Indigo does feature a crude sensitive here, which is recovered from the opening lows. Interestingly, the counter has recovered nearly 5% from the opening lows. As you can see the intraday chart, it had a gap down opening from thereabouts. I think last 1 hour it has seen a good recovery, 3% higher. Though crude prices inching high is a negative news for this company, but there is maybe some development. The stock's definitely recovered, and it's been an underperformer for sure, because the stock technically right now is trading below all its key moving averages. Futures are seeing heightened activity as the open interest has surged about 12%. If you could just pull up SpiceJet as well, because that too was down about 5% in the opening session. Let's see if it's a sector specific move which has been seen for Interglobe Aviation. No, SpiceJet has not recovered. It's still down about 6%.
Well, but crude is the talking point. Brent crude prices are trading at 8-month highs today after reports of US airstrikes on the Iranian Revolutionary Corps, which resulted in the killing of its commander. This is the highest level for Brent in the last 8 months. James Heron of Bloomberg News has more on this. James, what is it that you are hearing about what could happen in the near term?
Well, the consensus certainly among oil market watchers and Mideast experts is that this is a significant escalation that is likely to prompt some kind of retaliation from Iran. No one really has a clear idea of what that entails. But of course, recently Iran has shown its ability to interfere with oil production and oil trade. It's attacked tankers in the Persian Gulf. And most recently in September, it had a major airstrike on Saudi Arabia's largest facility, which caused a short interruption to supplies, but it was still the biggest supply interruption in history for the oil market and had a significant impact on prices.
Yeah, that would be the fear. James, thanks so much for bringing us that perspective. And let's get more perspective on this with Vanda Hari of Vanda Insights. He joins us right now on the phone line. Vanda, good having you. Thanks for taking the time out and speaking to us at BloombergQuint. This is Neeraj here. Good afternoon. But afraid it's not turning out to be a good afternoon with crude prices doing what they are doing.
No, good afternoon to you, Neeraj, and hopefully a happy new year. But indeed, I mean, what a shocking way and distressing as well to start the new year. Certainly, especially countries like India, Asia, major importers of crude from the Middle East. It's a hugely worrying development. Geopolitics and geopolitical problems in the Middle East have been worsening through 2019, but at least the one small relief has been that none of those events that you were just referring to earlier interrupted oil supplies from the region. But, today's event, just the huge implications of it and the potential repercussions have brought all those worries back to the fore, of disruption of supplies from that region.
Yeah, well, here, I mean, we were just speaking to James. I think earlier Jody Schneider of Bloomberg News also reported this, and the Bloomberg articles speak about this, that there is every possibility that Iran may not keep quiet on this. I mean, the Twitter handles that are floating around on WhatsApp of some of the comments that have come in from, presumably from Iranian leaders, seem to suggest that this is not the end of it. Now, you've looked at this piece very, very closely for so many years. Yeah, nothing may happen the way we predict, but let's try and get your insight of how do you think this piece unravels over the course of the next few days or weeks?
Yeah, good question, Neeraj, and that's what I've been racking my brains over as well to try and figure out, because that's really the biggest answer that the world and mostly the oil market needs right now. Look, no one doubts that Iran will want to retaliate. It will want to exact revenge. I mean, the rhetoric that you are seeing in the social media and the media is entirely predictable. But I think beyond that, the rhetoric is not going to stop oil supplies, right? So we have a risk premium that has already set into oil prices. There's been a 3% spike, but the gains have stalled after that precisely because the oil market needs to now wait and see what, if anything, Iran does that could disrupt supplies, either production through the attacks the attacks we saw in Saudi against Saudi Arabia last year, or through disruption of shipment, and especially in the Strait of Hormuz. Now, my personal feeling is that Iran will probably not try to do the predictable. I think it will probably want to use the element of surprise in its favor. And what that means to me is that it will probably escalate, but not in the next few days or not in the next few hours, but perhaps over the next few months, attacks against the U.S. personnel and U.S. troops in the region. And maybe fire up its militias, which are spread across the region, use them to mount these attacks. That would have the element of surprise. It would keep, I imagine it would keep the U.S. on tenterhooks. And probably that's how I see Tehran playing its hand.
Hi, Vandana. Good afternoon to you. Would you agree then the spike that we are seeing is largely got to do with the risk premium which is attached and less due to supply disruption? Reason for that would be there were already US issuing sanctions on Iran.
So oil has been climbing pretty much since the 13th of December. To a large extent, it has been because of hopes of renewed acceleration in global economic growth, the U.S.-China trade deal. Partly it has also been with an eye on the deepening cuts by OPEC, non-OPEC through this quarter. What we have seen today is a very clear addition of about 3% spike that we have seen in crude prices today is an acknowledgement of the risk. It is not factoring in or pricing in completely the risk that of supply disruption, because again, let's face it, there is you can't envisage a partial disruption. What you're looking at is probably, if anything happens, if it's a full-blown military conflict, we're looking at a major disruption, in which case not just $68, Brent could then fly past 100 even if you're looking at the worst case scenario, because that region supplies nearly a quarter of the world's oil requirements. I don't think that is anyone's base case scenario, certainly not ours at Vanda Insights. As I mentioned earlier, it will probably be more targeted, sporadic, random strikes by Iran, not a full-scale war in the region.
Well, goes without saying, markets will remain jittery in case there is any sort of heightened military action which comes from Middle East. Having said all of that, Vandana, what's your base case scenario moving ahead? Of course, 3%, 4% gains is something which we've already seen. Your upside target towards crude will be how much?
So I think the next few hours will be very crucial for the oil market. You will probably have oil traders sitting on the edge of their seats, especially to see what exactly Iran does beyond the rhetoric that we've already seen. Then as the next stage, as the U.S. wakes up, the market will be looking for comments potentially from President Trump. And probably U.S. announcing further beefing up of its troops in the Middle East, and I think that probably is not a good idea right now, but that's probably going to happen. The U.S. was hoping, I presume that Trump administration was hoping that this will deter Iran and make them back off from strikes. But if anything, I agree with what Joe Biden has said on his Twitter, that this will probably escalate and put U.S. personnel much more in harm's way in the Middle East. So we can expect a simmering low-grade sort of risk premium staying within crude prices for the foreseeable future.
All right, Vandana, we leave it on that note. Appreciate you joining us and taking us through that outlook as to what one can expect with regard to crude oil prices, which have already spiked about 3 to 4%. Of course, some cool off has been seen with regard to Brent crude. Morning, it was up about 4%, and the gains have come in on back of the tension in the Middle East region. And of course, remember, US has already issued sanctions on Iran, which means that a country cannot export oil to any other country. In fact, India used to import oil from that country, which we stopped last year due to those sanctions, but it will have a risk premium attached to it if the tensions escalate going ahead. In fact, if it escalates to other regions for the likes of Saudi, as Vandana was highlighting, of course, then that could definitely lead to any sort of supply disruption, Neeraj.
Yeah, well, it's such a big piece of news, and what if crude were to move higher? And that's the big point.
But it impacts India big time.
In a big time, yeah. So let's wait and watch for now. 68.36. Let's see how it goes. Well, before we move to our market guest, this is a Bloomberg exclusive. Suzlon Energy set to offer its lenders a proposal to restructure its debt at a 68% haircut or a discount. The wind generating equipment maker is set to offer 3,600 crores to its lenders against 11,300 crores of outstanding debt. Viju George of Bloomberg News, who broke the story, which was flashing on your screen about 15 minutes ago and flashing now as well, joins us right now with more details on this. What exactly are you learning? Good afternoon.
Hi, Neeraj. So Suzlon has now met creditors, is offering to make a restructuring deal. This is a difficult offer for creditors because they're offering to write down the creditors significantly. As background, Suzlon obviously has been talking to creditors after they defaulted earlier this year. This is meant to be an out-of-court restructuring outside the NCLT. And Suzlon's offer will either be approved by creditors or they will choose to tip it into NCLT. So this is a pivotal point. The creditors will need to consider a few things, one of which is how much they can get out of NCLT if this company were to go into NCLT. The nature of the business makes it difficult to necessarily get high recoveries through NCLT. So it's a bit of a rock and a hard place here. A steep haircut potentially from this company's offer, or potentially bad recoveries from NCLT 1 year later. So it's a difficult position to be. Yeah, that's where it is.
Any timeline that the creditors have to consider this proposal?
So there's a regulatory timeline for provisioning under the June 7th circular. The 6-month period expires on Jan 7th. So after Jan 7th, creditors will have to increase provisioning, add another 20% to provisioning. They might still choose to do that and go with a longer timeline, but there is that deterrent for them. So from their point of view, blue sky scenario, Jan 7th is when something happens, but you never know with these things, and it's a difficult choice to make, and there's probably a long process here.
Yeah, probably a long process, difficult choice, and well, blue sky scenarios painting blue sky scenarios after the event hasn't quite worked out in the last few events like these. But thanks so much, Viju, for joining in and giving us that perspective. Well, Suzlon has been active the last few days as a stock as well, but this is the important piece of news. But as we said, it's a hard choice for the creditors. Small stock, but an important one, and a large quantum of debt as well. But before you move on to a market guest, just a couple of quick stock checks that we want to be doing in today's trade. So we already highlighted the aviation names, and Interglobe Aviation probably has reasons of its own why it is doing what it is doing, up about 3.21%. And we'll get to that. That notwithstanding, the ones which are really active, we were speaking yesterday about Motilal Oswal as a stock doing well. Look at that one flying in today's session to 856, up another 3.5% trading at the high point of the day. There is strength in Sterlite Tech even now, at 3.5% higher. You heard the management a bit earlier. And some of the cement names continues to rise and shine. Navneet, more importantly, the small ones like Sanghi too are actually trading well. So up about 4.5% for that, and a couple of others too have done reasonably okay for themselves. Well, maybe a good time to get in a market voice. Ajay Bodke of Prabhudas Lilladher joins us right now on the show. Ajay, good having you. Thanks for joining in, and best wishes for a new year. Now, you combine a lot of macro impacts that things can have on the market too. Right now, the market seems to be on steroids. Every dip gets bought into, but crude is now the joker in the pack and arguably the most important one. Should the prices inch higher, would you believe that the pre-budget rally that everybody is hoping for could be at risk?
Good afternoon, Neeraj. Thank you for having me on the show. I think one of the headwinds that the market would encounter, in my view, is if the global crude oil prices were to show a flare-up from the current levels. Let's not forget that we are going into the budget with an expectation of a large slippage in fiscal deficit, which is unnerving investors. And in such a scenario, if the trade and current account deficit were to worsen due to the global Brent prices moving and sustaining at say mid 70s or God forbid inch towards late 70s or 80s, then I think the Indian equities will have to take note. We have seen this unrelenting surge in Indian equities due to large FI flows. But if the global risk aversion were to spike, then these flows I think could recede, and that I think would in my opinion put a cap on the near-term rise in Indian equities. Also, I think lately we have seen the broadening of the rally and people moving out of their comfort zone from mega caps into small and mid caps. Now that could sort of come to an abrupt halt if risk aversion were to spike. Also, emerging market currencies, so risk assets sort of could plummet, and safe havens like say Swiss franc or Japanese yen, I think could see strengthening along with precious metals like gold. The last point is I think the Indian bonds, one will need to keep a watch, because if there are large FI outflows, then there could be a sell-off there and the bond yields could spike. So I think let's all hope that the oil price rise is contained, but I think as the Iranian supreme leader has said, that they will be sort of striking hard at the American and their allies' interests. So the next few days would the markets need to be very cautious and see sort of what kind of retaliatory measures are unveiled by Iran, and a further retaliation from America and its allies to that. So I think geopolitically we are entering into a sort of a very fraught kind of environment, and I think I would be very cautious, because the markets also have seen a very sharp rally from 10,600 levels in Nifty to 12,300 levels that we are witnessing today.
And this has come just at a time when both global and domestic cues for our markets were looking good. Yesterday, it was a broad-based rally. FIs continued to buy. PMI data for the month of December looked good. And as Ajay was highlighting, I also want to point out the rupee, which is depreciated by almost 0.5%. That's at 1 month low, and we are inching closer to the mark of that handle of 72 to the dollar. Remember, last year in 2019, rupee depreciated just about 2 to 2.5%. Ajay, good afternoon. In light of this headwind now in the form of geopolitical tension, of course, higher crude prices do not augur well for Indian equities, and it will also put pressure on government's fiscal targets which they have set. Do you then feel for equities, investors will once again start taking refuge to quality, expensive stocks, which was the theme last year?
I think, as I mentioned, people will again start finding comfort in the crowd, and the move away from mega caps and large caps into small and mid caps. I think there would be a halt there. Last 2 days, one has seen the small cap index in particular doing very well, and sort of risk aversion people thought has receded. But this event actually would make a lot of investors again worry. So again, sort of some of the names in BFSI or consumers, or for that matter even IT. I think if the rupee were to come under sustained pressure, then some of the exporter names, especially in sectors such as IT, which have lately sort of underperformed, if you take a last 3 to 6 month view, I think could again come back into flavor. Some of the large names out there like TCS or Infosys could again become the safe havens for the market, along with some of the other exporters.
In today's trade, of course, it is turning out to be a good session for the IT pack. Nifty IT is one of the top sectoral gainer. We've seen gains coming in for these heavyweights, and even the mid-cap IT companies, be it Mindtree and IT Tech, have been quite active. Ajay, of course, crude being an external factor, we can't do much about it. But for in terms of domestic factors, the focus now shifts to the budget on 1st February. What's the approach then you would advise investors to have till then?
Yeah. So I think a lot of expectation build up is happening, and people are expecting some relief relief measures to be unveiled insofar as say long-term capital gains tax is concerned, or dividend distribution tax is concerned, or some other measures to rev up the slowing economic engine, and from the government to give a leg up to the slowing aggregate demand. But the fiscal space being extremely limited, I think I sort of have doubts whether any relief on the personal income tax front, the government has the wherewithal to offer that. However, I think on the capital gains tax front, I think if the government were to offer relief, that would be taken positively by the market. I think the government's focus on priming the economy by large investments in roads, railways, and power transmission should continue. The program announced last week about infrastructure spend, in my opinion, was only a statement of intent, because there I think a lot of emphasis has been given on the private sector marshalling in resources. But the balance sheets of the private sector infra companies are in tatters. I think the working capital cycle has got elongated. And the payments from both central, state governments or local authorities, I think, are not forthcoming in time, and that is having a cascading impact on the balance sheets not only of the tier 1 contractors but also tier 2 and tier 3 contractors, which who are worse off because they don't have the luxury like the prime players, say like an L&T, to raise funds at fine rates. So I think the entire system, I think, has gotten impacted because of the stretching of the balance sheets. So I think the government will have to think of some innovative measures of raising funds, either by monetizing, I think, say commission projects of NHAI into large buckets and offering them to pension funds or sovereign wealth funds, and getting sort of the balance sheet deleveraged, and then using that money to further recapitalize newer projects. So I think some innovative such funding sources the government will have to think about to get the infrastructure sort of piece going. Insofar as consumption piece is concerned, I am more positive there, because my interaction with a large number of companies on ground before the results indicates that the first signs of improvement in demand, I think the bottoming out process has already started. Although it will be a very slow U-shaped recovery as compared to, say, a V-shaped recovery that the market, some people in the market might want. So I think plays in, say, sectors which are consumer discretionary sectors like FMCG, retail, even auto ancillaries. One should sort of have a constructive view out there. Insofar as industrials are concerned, one will need to be a little more patient there. In case of global cyclicals, I think we are expecting positive signs coming from both China and America, and a deal expected to be signed on 15th of Jan between the two countries. So that, I think, is fueling rally in case of global cyclicals like metals. But there, I think my channel checks are indicating that the quarter results would sort of be positive, but the prices also have sort of moved up. The stock prices have moved up significantly. So somewhere I think the valuations would get capped in. And insofar as domestic cyclicals like cement are concerned, I think the volume growth trends continue to remain very tepid, because construction on the rural housing front has not yet picked up. But I think the EBITDA per ton trends should hold up well, because the prices have, all the manufacturers sort of have held up the prices quite well there. So I think, so sectorally, I think our bias still remains with BFSI, consumers, being the large overweights there. And as I said, sort of, insofar as industries are concerned, I think one will need to be very cautious and keep on observing the trends very closely there. Lastly, I think the recoveries in case of say SR Steel to be followed very soon by Bhushan Power, Ruchi Soya we already seen being resolved. I think is very, very positive for corporate banks.
Ajay, while you gave your preferences in the form of consumer and BFSI, but also want to check now that if let's say if the crude prices continue to inch higher, and of course there is that demand for safe havens once again, Pharma as a pack, defensive pack, has not done well in last many years. What's your outlook there for this calendar year?
Yeah. I think in case of Pharma, it is instead of taking a top-down approach, we always prefer to take a bottoms-up approach for Pharma. And there I think, we have seen over the last 3 years, although the price erosion has been quite savage, but then fundamentally, I think the problems being faced by many of these companies insofar as their US FDA related issues are concerned, continue to remain overhang in many of the leading players. So I think unless there is a clear resolution there and a path seen by investors that some of the key plants are coming out of the ambit of the US glare, US FDA glare, people will be reluctant to bet on these names. The domestic part of the pie is doing quite well, and then the domestic focused pharma companies have outperformed quite admirably as compared to the US generic focused companies. So our focus there, I think, remains with companies like Dr. Reddy's, which have navigated this treacherous period quite admirably, and Cipla. So these two names are the ones that we would be more constructive in the short term.
Okay, Ajay, we'll leave it at that. Thank you so much for taking the time out.
And the company that we are positive on.
No, sorry, I missed you, Ajay. Missed the last sentence. What were you saying?
Yeah, I said, in the mid-cap space, IPCA continues to look quite good.
Okay. So those are some names, well, large cap and also in the mid-cap space in the pharma pack, but views on IT, views on oil and the impact that it has on the fisc and lots more. Ajay Bodke, thanks much for taking the time out and speaking to us today.
Thank you very much.
That's the view from Ajay Bodke of Prabhudas Lilladher. By the way, just before we get into our next guest, and maybe we can ask him what to do with the commodity as well. Look at this chart that we have on gold. Now, this is the seasonality chart that we have on gold, and it shows how gold has done through different months. And for the month of January, is the column on the right of your screen. That is, you see the ticks of green that we have there, the pointer. That's the monthly return for gold prices in the month of January. And since 2012, you've had but 1 year, which was 2013, when there was a small negative return. Otherwise, gold has largely returned positive. And the events of the last 12 hours ensure that we start off 2020 with a bang. 1.78% gains right now. Let's wait and watch if there is more in store. Anand Tandon Johnson right now with his thoughts. Anand, looking at the way the events are shaping up, would you rather buy gold? Would you rather buy crude? Would you rather buy equities?
Well, first of all, a very happy New Year to you, Neeraj.
Very happy New Year.
Really speaking, if you're an equity player, those are not options that you have. You may want to take a bit of a hedge position against some of those, but you can't really put the kind of money that you can put in equities into, especially gold. Maybe oil can absorb a lot more money. So the short answer is no. I think while gold may be a little more positive and you can hold on to it for a longer term, I would imagine that anything more than 5% of your portfolio in gold, you're not really going to achieve much. Crude, of course, is even shorter term trade. I think if the matters in Middle East don't escalate, I would imagine that it'll go back to slightly lower prices.
Okay, well, if that happens, that's music to the ears. But just wondering, Anand, we entered into 2020 with the palpable belief amongst participants that mid caps and small caps would do well. They've started doing well in the recent past, and that we may well have a pre-budget rally as well, and then today happened. It's disrupted yesterday's momentum, maybe momentarily, but it has disrupted. Since the crude prices and the Middle Eastern action is unpredictable, would you believe that the smooth uptick might face a few gyrations, and if indeed crude were to inch higher, we may actually be in for a rude surprise when it comes to expectations about a pre-budget rally?
Well, actually the budget doesn't have too much that it can offer if you really look at what you can do in the budget in terms of taxes. So there is one thing which is to make policy announcements, which will not actually make any difference in terms of the money or the fisc immediately. The other is in terms of the taxation. Now the indirect taxation no more there. The direct taxation corporate has been taken care of. So you're really left with either tinkering with the export-import rates or with the personal income tax. I don't think there is enough flexibility right now to be able to do much on the personal income tax front. Maybe you can increase the limit at the lower end a little more, but beyond that, I don't see them doing much. Export-import tinkering is neither here nor there because they have been at it all along by, changing the various import tariffs and protection and so on. So net, I think the budget is anyway a non-event. I don't know what, what great expectation one can have from the budget. Yes, it can disappoint for sure. It can, reduce demand even further by increasing taxes in places where you don't want them to increase and so on. And therefore, it can have a negative impact. But on the positive side, I think other than a few announcements that they can make, I don't think that the reality can be very positive.
Okay, well, that's about the budget expectation. We'll have to see what surprises budget of this calendar year throws up. But in terms of individual stocks, remember in the morning we were highlighting how Goldman Sachs has upgraded the upstream companies, some the likes of ONGC. They've upgraded the stock to buy. They've also increased the target price to, no, they've cut the target actually to 175 from 220. And the stock had actually had a gap up opening in the morning, but it's cooled off more or less completely. Day's high was somewhere about 138 and it's now at 129. The other stock which they highlighted was Oil India, where they had upgraded the stock to buy from neutral rating, and there too they hiked the target from 205 to almost 255. Hi Anand, good afternoon. In light of crude oil prices also inching higher, and that augurs well for these upstream companies, would you take a bet on them, be it ONGC or Oil India, or you stay away from the PSUs?
So from a strategic point of view, you want to stay away from PSUs, but from the point of view of tactics, you may want to get in. The valuations are reasonably cheap. And if there is some trigger that can take the earnings up, near term, you could see some upside. But it's not a very, nobody really looks at India to go and buy a global commodity, frankly. If you have to buy an upstream oil company, which you are taking a bet on in terms of the E&P, you have a lot of companies. Or if you're looking at an international player, they would be looking at these kind of the companies that are listed in other markets rather than looking at India. In India, you're looking for domestic growth. I don't think these companies reflect that.
Okay. Let's take a look at the oil marketing companies also, how they are doing, BPCL, HPCL and IOC, because crude oil prices moving higher does not augur well for them. Though, of course, there's no subsidy attached right now. These prices are deregulated completely and they're decided on daily basis. And of course, there were reports indicating how with international prices moving higher, even in the domestic market, a couple of cities have already hiked prices. Okay, let's bring in some technical check on the markets because we are inching very closer to the support of 12,200 on Nifty, and Nifty Bank has been holding that mark of 32,000. We're joined by Sameet Chavan of Angel Broking. Hi Sameet, good afternoon. Do you use these dips to create long position because the longer term charts may still look positive?
Good afternoon. Yes, certainly. Looking at yesterday's price action, we were all set to have a good gap up opening beyond all-time highs. But considering the geopolitical concerns, we are seeing some selling pressure at higher levels across the globe. In fact, as far as our markets are concerned, we believe that as long as 12,150, 12,100 is defended successfully, one should trade with a positive bias and avoid any kind of short positions. In between, yes, we are likely to see such kind of hiccups. But on the higher side, 12,300, and once we surpasses this particular level, we could see this northward trajectory continuing probably towards 12,000. 32,400, 32,500. As far as Bank Nifty is concerned, 32,000, 3,100 again, acts as a very strong support, and from here on, will not be surprised to see buying emerging at lower levels, and then Bank Nifty again heading towards 32,500, 32,700. So as long as these key levels are defended successfully, one should use these dips to go long. And if you look at the mid cap index, how it is shaped up in last 4-5 days, we have seen sheer outperformance from the mid cap index, and due to yesterday's price move, we have seen a good breakout from inverse head and shoulder pattern on daily chart. So that augurs well, and from here on we would expect outperformance to continue from the broader end of the spectrum.
Okay, Sameet, in terms of individual stocks, then, what are you betting on this afternoon?
We have a couple of stocks which we probably believe that would successfully defend the market at lower levels. So L&T is the one stock which has shown some early signs of revival. The stock has not participated in the recent rally at all. It was languishing around its multi-year support lows. But in last 3-4 days, we have seen some early signs of revival. It appears that the stock is now attempting to come out of its slumber. So L&T can be bought at current level. This deep can be used to go long for a target of 1372. Stop would be around 1317. And apart from this, pharma space has been buzzing since morning. Although Lupin has come off a bit from its today's high, but we believe that the overall structure is positive and stock is poised for a good relief move. Lupin can be bought at current levels, stop around 762, and we have a positional target of somewhere around 820, 824.
Okay. We will watch out for some of those names. The one that is intriguing today is Z Enterprises, down about 5% again today after that downtick day before in yesterday's session too. Anand, this whole cap on pricing, it may be great for the consumer from a business perspective for a sector which is already reeling under serious pressure. Further nail in the coffin, can it bring down valuations and prices even further?
I would be surprised if it doesn't. As you mentioned, the sector is already under stress. There is news of layoffs, etc., in many news channels, and the entertainment segment is already under problems because of the likes of Netflix and Amazon, which are increasing the price of content as well as taking away much of the advertising and the viewership. So I think it's certainly not good news at the time for the sector, but as a consumer, enjoy it.
Consumer you can enjoy, but Z's down 5%. Anand, just wondering, would you look at valuations? Because I hear that argument a lot, that if you look at Z valuations compared to either its historical valuations or compare it to the other players, Z is not that expensive. It will see some deals later on and therefore buy it, or would you, because of this and the other reasons, just stay on the sidelines?
So, I think the Z has other problems as well. The fact of the matter is that the promoter's interest is not aligned with yours anymore. At the end of the day, they have less than 5% stake or just about. And, therefore, given that kind of stake in the company, costs will tend to balloon rather than show up as higher profitability. So I'm not necessarily certain that it's, as a minority investor, your interests are aligned. At this stage, it may make more sense for the new shareholders to actually change the old management, even though that will mean that there will be a whole new learning curve. But overall, at least the alignment of interest will be taken care of.
Okay, Z's at day's low, down 5%. We highlighted this even on the futures side. The stock is witnessing some fresh short positions, and though, as Anand's already highlighted, TRI's amendment to that new tariff order is more customer-centric, which means we may have to pay lower bills for our cable connection. Okay, Z 12% higher. Sameet, what do you do with this one? Do you create fresh shorts at 275, or do you suggest people who already had short positions to book profits?
No, I think in this case, those who have already shorted at higher level, they should stay put. Stock is on the verge of a breakdown, but I would still wait for a breakdown to happen beyond 270. So as of now, those who have shorted at higher level, they should trail their stop losses now somewhere around 284, which makes a good risk to ratio once the stock slides below 270. And below 270, you could see levels of say 265, 262.
265 or 262 on the downside is something that Sameet is advising. Remember, yesterday all the steel makers were up, and we did speak to the management of JSPL confirming that they had increased prices for the third straight month. Anand, of course, there is optimism around the US-China trade deal, then some domestic factors. Prices have started to inch higher in the last 3 months, and you also got an indication from a couple of brokerage notes highlighting that prices could continue to move higher even in the coming 2 to 3 months. In light of that, when slight attention is now moving towards these cyclicals in the form of steel companies or cement makers, would you look at them closely, because valuations here for a couple of these companies are below their historical averages?
For steel, yes, certainly. I think the valuations are a little cheap on the assumption that the prices will continue to go up or at least sustain, and the fact that we have some level of protection from imports. The market tends to look a little reasonable and a bit buoyant at this stage. One has to just keep an eye on the fact that now that SR has gone into Arcelor, at some stage it will come back again, and that will perhaps increase the supply quite dramatically in the market. But till that were to happen, I think right now the balance seems to be in favor of the steel producers. And therefore, I'm not surprised to see the price moving up of the stocks. Right. Cement, I think, is a different ball game. I think the capacity there continues to rise much more than the analysts assume. And the pricing power is simply not there. If the infrastructure projects were to take off and actually result in increased demand, that will be a different issue. But it's a protected industry, very regional, and therefore you could be looking at that also on a slightly longer term basis.
By the way, since we are also looking at stocks, while fundamentally we're also on the charts, just look at this. There is apparently a trend line breakout that is happening in some of these companies, and Tata Steel in particular is the chart with heavy volumes that has been accompanied this trend line breakout that you see at this. Right, that's my producer showing us the trend line breakout that has happened in Tata Steel. So watch out. Anand's point is well taken. I wonder though if these dips will be used to buy into some of those companies. And Sameet, Chavan, maybe you look at the derivative positions very closely as well, obviously. How does Tata Steel look?
In fact, Neeraj, as a disclosure, since last 1.5 months, we were quite upbeat on Tata Steel from the metal space and Vedanta. However, Vedanta has slightly underperformed, but Tata Steel has done well over the past 1.5 months. The breakout was somewhere around 400, 420, which continued, and then stock surpasses 200-day moving average also, which has been acting as a sturdy wall since last many months. So that 200-day moving average around 440 will now act as a sacrosanct support zone. Any decline, probably 15-20 rupees decline from current level, would make it a good reward ratio, and over the next couple of months we would expect the stock heading towards 520, 525.
Okay, that's Tata Steel. 480 is currently the price, and with the surge that we have seen already for this stock, today is the day when you are seeing some bit of profit booking. Anand, before we let you go, just a month to go now or maybe less than a month for the union budget. If somebody wants to take fresh bets in the market, what approach would you advise? How to go about it?
Well, by and large, stay away from trying to punt on the budget. If at all, put around closer to the budget, because like I said, the positive of a negative surprise remains. That said, the government should be oriented this time towards trying to get the economy going. The only thing that will really move the market for the near term will be a cut in income in long-term capital gains and a kind of more rationalization of taxes on dividend. I've not been hearing anything about it. If it were to happen, it will be certainly good news. Short of that, I think it will be an event which we will wake up the next morning and forget about.
Well, maybe that's what the role of the budget should be. It shouldn't be the one that will impact markets too meaningfully. And maybe Anand's point should be taken well, actually, if it does or if it really were to happen. Anand, if I can just ask you one last question before we thank you. There's this update that has come in on Interglobe Aviation, wherein apparently the annexures that they've given out, Rakesh Ganwal has sought to amend articles of association to sell the Indigo stake on an as and when basis and remove the tag along clause. I don't know if I'm throwing this out of the blue at you, but any thoughts here on what this could actually do for an Indigo? Because if indeed the promoter feud shows some signs of moving out as an overhang on the stock, it could be considered positive. For now, the stock has reacted a bit, but maybe there's a slightly medium-term implication on this.
Certainly, if the management sorts their issues out, it will be definitely good news. You can focus back on the business, especially at a time when spice is again showing signs of some stress, and the rest of the market there is no real competitor available anymore. So if you were to go back and focus on the business and start growing again, certainly it will be positive for the stock. That said, the industry continues to show that they are unable to raise prices to a level which is economic, at the same time being able to demonstrate growth. So that overhang on the industry will remain. But the short answer is that yes, any resolution of a dispute which is taking time away from the management from focusing on business is good news.
Okay, Anand, we leave it on that note. Thanks a lot for joining us and taking us through your views in the markets and what to expect from the union budget. And talking about markets, keep an eye on Nifty because we're inching very close to the mark of 12,203. This is day's low for you, and if we breach the mark of 12,200, that's breaching one more support for the day. But talking about individual stocks, the stock of LT Foods has gained over 20% from mid-December lows, and that it had posted higher local prices and also weak rupee may add to the positive sentiment around the stock. So how is the second half looking like for the company? Let's ask Ashwani Kumar Arora, the MD and CEO of the company. Hi, Mr. Arora. Good afternoon and thanks a lot for joining us. New Year greetings to you. Give us a sense, how are the exports panning out? Because last when we read some couple of articles, Iran exports had fallen to rice exports particularly had fallen to 5-year low due to exports being impacted to Iran. What's the current status? Give us a sense on pricing and exports.
So you're right, Iran has decreased, and I think this year the volume we are expecting is half what the India has exported. Having said that, as far as LT Food is concerned, we don't have any exposure in Iran. So our focus is India, the rest of the Middle East, Europe and America. And that markets are growing between 5 to 10% on different geography.
Okay, you can correct me if I'm wrong. I believe these export orders are signed by October end. So you don't have any exposure to Iran, but for the rest of the market, how is the market looking in terms of order signing? Has it been better than the last year?
No, that's not better, as you said rightly. We are expecting the half the export which has been exported last year. But the Iran has started importing, and now slowly the shipments have started.
So you are also looking at Iran market as and when the order keeps coming?
So Iran not in a focus for the next 2-3 years unless and until the country gets stability. So as an LT Food, we have a policy to work only in the politically stable market and which are growing market.
Okay, give us a sense, what percentage of your revenues currently come from the export market and from the domestic market?
So roughly, so we have two businesses. One is the core basmati business, which is under Dawat and Royal brand, which is number one in America, and Dawat is around 28% market share in India. And the other is the organic business. So if you include, because organic is 100% almost export, so 60% of the consolidated basis revenue comes from export and 40% from India.
Okay. And the rupee fluctuations this time around may have a positive impact going ahead, I'm saying, for the fourth quarter, because we are seeing some depreciation coming owing to tensions in the Middle East area now.
So yes, definitely, any rupee depreciation will always help LT Food.
Okay, 40% revenues, if they're coming from the domestic market, I just want to get a sense with regard to prices, how they have panned out in the domestic market in the quarter gone by.
Can you repeat that, please?
How are the prices panned out for your domestic market in India for the third quarter?
Prices, you said?
Yeah, pricing.
So, yeah, pricing is, so we have two segments. One is the consumer segment, which is very stable, and the food service, because of the lower input costs, so pricing realization will be low as compared to the the first half year.
Okay, so you've clocked 10% growth on the top line, 20% on the bottom line for the first half of FY20. Will the second half be on similar lines, or because of lower realizations, the numbers could be impacted?
So we are expecting same kind of, on the growth side. So overall, the growth will be around 7% full year basis. But the bottom line will be the same, which we have done in the first half year.
Okay, before we let you go, give us a sense with regard to your debt picture. What's the current debt right now on the books, and are you planning to reduce it?
So the target is to reduce the debt level to 200 crores against the last year by 31st March, and we are sure that we will be achieving that.
And how do you plan to reduce the debt? What measures are you going to take? Will it be from
So one is all the this year all the internal accruals are to reduce the debt, and second the profit margins improving, and third is this year the procurement cost is low, so we are expecting the debt level to be reduced by 200 crores.
Okay, so largely it will be through internal accruals, sir.
Yeah.
Okay, Mr. Arora, we leave it on that note. Appreciate you joining us, and all the best to you for the remainder of this financial year. Well, that's the management of LT Foods. Fortunately, they don't have any exposure to the Iran market, but as we were highlighting, rice exports overall are at 5-year low, and we did speak to the management of KRBL, which do have exposure to that market, I think 2 weeks back, and they had highlighted they've started to sign contracts, but on year-on-year basis, the exports have been lower, and the trends have just started to improve, but the sort of developments now which we're getting from the Middle East, maybe they get impacted once again. So in terms of stock, let's just pull up the last 1 year chart of LT Foods and see how that stock has performed, because KRBL was quite active, I believe, in the last 1 month or so. Last 12 months, not done too much. LT Foods is down about 43%. KRBL, I believe, the stock started moving higher because the promoters bought from the open market some 0.5% stake recently. KRBL also last 12 months just managed to recover flattish in trade leverage.
Okay, well, some other stocks, and just want to get some chart checks going. And the rice companies are quiet, but the clutch of other names which are doing well. Viatech Wabag is up about 12%. I'm seeing some strength in Zensar Tech up 5%, and both GMR and GVK are doing well for themselves, up 4.5% apiece. Couple of stocks, Sameet. Okay, GMR Infra. Can you look it up on the charts and tell me how do they look?
See, honestly speaking, generally we avoid this counter, but the way the stock has outperformed in the recent past, it looks quite encouraging. Recently, a good rally from the levels of 14.5 towards 22.5, and then stock went into consolidation mode. And today we are seeing a breakout from this consolidation. And if you look at the volume activity, it has risen substantially. So that provides some kind of credence to this rally. From here on, GMR Infra is likely to continue this move. Next level to watch out for would be around 24.5, 25, and on the low side 21, 21.5 would act as a very strong support.
Okay, so that is one a key support out there for this stock, and then the kind of gains that Interglobe Aviation individually is making, we are not seeing that same gain in SpiceJet. It's backed by some fundamentals, but the stock has cooled off as well. Sameet, would you trade Interglobe or leave it alone?
We would certainly trade. In fact, we have been closely tracking this stock since last 3-4 days. We were anticipating this breakout, and this breakout has now come with sizable volumes. So from here on, the stock is poised for some kind of relief move. Recently, we saw good underperformance from this counter. Now it is heading towards say 1450, 1430 kind of zone. So stock can be bought at current level. Keep a stop loss around 1320. Stock may be slightly volatile considering its recent price action. So 1320 should be a strict stop loss, and on the higher side, once the stock surpasses 1380, we could see a good move towards 1430, 1450.
Okay, that's Interglobe Aviation for you, which is up about 2.5 to 3%. There are a lot of other stocks which are moving around, but before we get to that, we must address the Fab 4 stocks of the day that feature in Sharad Dubey's list. Let's go across to him. Hi Sharad, good afternoon. What are you tracking?
Hi Navneet, the first stock is RITES. The stock is up more than 3%, its highest level seen in almost 7 weeks after the company received an order worth almost 100 crores from Bangladesh government. So it's a project management consultancy project for national highways in Bangladesh. Up next is IFL Securities, which is up almost 4.9% after Rare Enterprises acquired almost 0.9% stake in the company. The company is actually backed by Rakesh Jhunjhunwala and has acquired almost 27.84 lakh shares. Next stock is Interglobe Aviation. As we have discussed, the stock is up almost 2% after an EGM has been called by co-founder Rakesh Gangwal. So basically they will consider on January 29 itself, altering the articles of association. So the EGM has been called by the group, which is RG Group, which is actually composed of Rakesh Gangwal and his other co-promoters holding almost 36.64% stake in the company. And the last stock of the day is the NIIT Tech, which is up almost 3.3% after fresh longs are seen with a high open interest of 15% and volumes trading at almost 2 times its 20-day average. Back to you.
Okay, well, thanks a lot for that. So those are some names that you got to monitor in the session today. Sameet, Chavan, before we thank you, I would want your view on ONGC as something that was predicted in the morning, that while it may start off well, there is no saying that ONGC usually goes up because it tends to cool off. It's a very weak stock. Does today's move also signify that outlook, and therefore would you rule out all long positions in ONGC, or is your advice something different?
See, Neeraj, honestly speaking, looking at last Thursday's move, we were expecting a good relief move in this counter, and stock has clearly disappointed us. There was no follow-up move seen throughout this week. In fact, stock consolidated, and today also we have seen a good bump up at the opening, but stock has come off sharply from this level. So we would rather wait for this stock to surpass 134, which has been acting as a very strong resistance. And if you see today's high also, that coincides somewhere around 134. So 135 would be seen as a key resistance. If the stock managed to surpass in the near term, we could see the stock heading towards 140, 145. But till then, we would certainly avoid this counter.
Okay, that's ONGC for you at day's low. And Sameet, your BTST strategy for Monday's trade or any STBT, your call?
No, I think we would certainly go with the BTST ideas. As I said, pharma stocks are doing well. So from this, Divi's Lab is the one stock we have been closely tracking off late. Stock has come off a bit, but we would still believe that probably on Monday or Tuesday the stock will do well. Trading around 1830, can be bought at current level. Strict stop loss around 1808, and target would be around 1845, 1860.
Okay, Sameet, we let you go on that note. Thanks a lot for joining us and taking us through your strategies, but talking more about technicals and maybe about derivatives as well. Chandan Taparia of Motilal Oswal joins us on the show. Hi, Chandan. Good afternoon. Good to have you on the show. What's your top strategy right now on the index or on any individual stock?
Yes, good afternoon. Thanks for having me and wishing you Happy New Year on air. Talking about the market sense, the Nifty has been consolidating in between 12,100 to 12,300 zone from last 12 trading session, and decisive range breakout is missing on either side. Dips are being bought where follow-up is missing at higher levels, so we believe that such kind of range-bound bias could continue to be in the Indian markets going forward. And finally, the next leg of rally could start by surpassing 12,300, and that scenario index can head towards 12,500 to 600 zone. Talking about the trading ideas, we have a couple of trading ideas and couple of stocks which are holding the gains and showing the sign of strength. First trade, that is from the IT pick. In fact, we have noticed that Nifty IT index is holding well from last couple of trading sessions, and we have seen consolidation breakout in many IT counter. So first trade is buy on NIT Tech. This stock has given a breakout from its pole and flag pattern, and interestingly, this breakout is happening with open interest addition of around 12 to 13%, which indicates that the stock can move by 4 to 5% on higher side. So recommending to buy with a stop loss of 1590 for an upside target to our 1695 to 1720 level. One trade that is for the selling ideas, that is sell on Century Textile. The stock which is making higher top higher bottom on the weekly formation has negated the same in last couple of days. A negative structure has started to seen after turning from its deep overbought territory. We have seen some call writing with built up of short position, which also indicates some decline in the counter. So recommending to sell on Century Textile with a stop loss of 488 and expecting it to go down towards 445 levels.
Okay, thanks for your strategies, Chandan, and stay on with us while we address some more stocks. And we've also got Deepak Shenoy of Capitalmind who joins us on the show. Hi Deepak, good afternoon. Good to have you on the show, and New Year greetings to you. Let me start off with the media space and Z Entertainment, since the stock is down 5%. Yesterday we had the news coming in on TRAI's amendment on the new tariff order which was announced last year. So which is more customer centric, trying to stem the spike that could come in the form of cable bills. So good news for consumers for sure, Deepak. But besides these stocks, what do you make of the intervention by the government with regard to pricing now? Of course, there's a consultation paper being floated with regard to deciding the floor price for telcos as well. We've not seen that in any other sector besides the agri space where subsidies are already given. Do you think this can become a new normal going ahead?
Firstly, thanks for the wishes and wish you all a very happy new year. Coming to where tariffs have been, limits have been created, we've seen this in steel with a minimum import price on steel that was imported from abroad. We effectively set up a floor price for steel to be sold in India because obviously the local domestic manufacturers will not sell at much below the import parity price that was determined. This has been done for a number of other sectors as well. We've seen this in sugar, we've seen this in agri commodities. So now we're seeing it in a different form, perhaps in telecom, and at the same time you have ceiling prices in media, which is what Z and a bunch of other broadcasters are seeing here. So it's a bit of a little bit of overreach, perhaps you could think of as a government. I think meddling so much in pricing sounds a little weird. And who asked these telcos to reduce their price so much? Nobody forced them to do it. They've done it of their own accord. Now they're running to the government saying, please set up a floor price. That sounds a little, messy. They could raise their price. They have raised their prices 25-30% in the last month without the need of a government mandated floor price. So I think it's really nonsense that we should have a government trying to mandate a floor price for any industry really. And even in steel, other than the argument that some people in China or in Korea are underselling, selling steel at lower prices in India and claiming a kickback from their own governments, which is what happens. You don't see something like that. There are players willing to lose money here. If that was the case, we would actually set up floor prices for Swiggy and Zomato and all of these other startups as well who are losing hundreds and thousands of crores. Why shouldn't we set up floor prices for them also? Because they're also losing money. So I don't think this is a good precedent to set. Too much meddling is unnecessary, and hopefully the government will see the light of day that less government is actually better government.
Okay, point well taken. Less government is better. Governance is better, pardon me. Deepak, let's talk about your expectations from the budget. Then, of course, we've been asking all the market experts who've been coming on our various shows, your wish list for the budget.
So I think, the thing that I really think the government needs to get in order is the fiscal issues. Their borrowing costs are very high even now. The RBI is trying to fix this with Operation Twist, but I think they need to find a way to change the revenue characteristic, because in a slowdown, you can't increase taxes. You have actually got to cut taxes at some level, and to make up for the revenue, you need a different way to either get revenue or borrow at a cheaper rate. I think both are possible. I hope they decide to borrow at least a little bit of the money from abroad. I also hope that they would, increase the speed at which they were looking to sell, say, Concor, BPCL, and Air India. I hope those are addressed. I really don't see the need for a lot of SOPs in terms of personal taxation, not from any other point of view, but we are the 1% of society that actually pays a lot of taxes. And really for 1%, would you really, change the whole game? I believe politically it's not so much of a motivator. It's a great show thing, but It really is, India has been going on the scale of higher personal taxation versus lower corporate taxation. In that vein, I think they should cut GST more than anything else, and personal taxes can remain the same, or they can go into the direct tax code. I think the stronger thing that we need is the budget to be a non-event and decision making to happen through the year. And that's happened in the last year. I think we've seen the corporate tax cut come outside of the budgetary framework and thought process as well. So I don't think we should rely so much on the budget only for long-term decision making. But I do think that they need to think about financing the deficit in a better way and making strategic sales when required to be able to get more money. That's I don't feel industry stops are what we should expect at this point.
Deepak, good afternoon. Neeraj here. Best wishes for a good 2020. What's your sense of how should people approach a business like the upstream business right now? A lot of people were bullish. The brokerages, a couple of brokerages have been bullish there. Oil on the boil naturally helps, but these companies have not shown sustainable gains. Ignore them?
It's a good point, Neeraj. Firstly, thank you and wish you a happy 2020 as well. The interesting point about what the oil business is doing, and in fact today, is the Middle East is piping hot again in terms of tensions, war tensions as well. There may be a serious disruption, and that will hurt India quite dramatically. But I don't think it will massively increase gross refining margins. It might just crimp supply. And refining margins in Singapore have been very weak in the last quarter or so. So I don't think upstream oil, is, even though refining might not be such a great this thing, I don't think upstream oil is going to be a very huge winner of this. And I believe in the longer term that all the fears of war should hopefully subside, and if people see better sense. And but the big risk now is really about oil prices spiking and hurting the rest of India. So you might say that you buy an upstream oil company today. I think it will be useful for if the markets are hot, but if there's a war, an actual war in the Middle East, then I think money will go out of every stock, and therefore you might see a stock fall down even though its earnings look good. So I'm not in favor of the argument either way. So not really interested in upstream oil companies at this point.
Some other interesting asset stocks have started moving up, Deepak, the last few days. There is Indiabulls Real Estate, 4 days on a trot now, up and about. And these airport operators today, Deepak, are moving up. Now, GMR might be awaiting that permission for the investment of the Tatas into their business, but I don't know what GVK is awaiting. It's a small stock, but I'm just saying these airport operators are up and about. Do you think there is money to be made here because the airport business will be hived off in a separate entity? Because that's the game going on in town right now when it comes to these two names.
Yeah, I think the idea has been, try and put the airport business separately, because in GMR at least the airport business has a lot of potential, but they have so much other baggage along with that in the stock that you don't actually get a chance to value the business separately. And that there'll be intermingling of funds of some sort if they are the same company. So that, I think, if you create a separate entity, and we've seen a fairly large investment even in the Bangalore airport, and perhaps a view to putting that also on the block in terms of either an IPO or a stake sale. So I think there will be some kind of valuation changes if these stocks were independently listed. Having said that, these all depend on markets being buoyant. If the markets lose their sheen, you'll quickly see that these stocks fall apart, because the value in them has to be unlocked only through an IPO or through a sale. And if markets are not buoyant, we are not going to see the kind of valuations that they should see. Very heavily regulated, remember. So their revenues are regulated in almost every which way that is possible. And the government tries to earn a cut in all sorts of ways. So, but there's still a tremendous amount of, we've seen the Bombay airport, grow, and we've seen Delhi airport, which has become a massive area. It's almost self-sufficient now. So I think there's a lot of potential in these things if they're listed independently, but I don't know whether the current move is anticipating that or it's just one of those, it's the new year, let's get back into these stocks kind of thing.
Okay, Deepak, stay on with us while we also address what the dealing rooms are recommending in today's session as Darshan Mehta joins us with his channel checks. Hi Darshan, good afternoon.
Hi, good afternoon, Navneet. One of the stocks that's been spoken about is Interglobe Aviation is doing well in today's trade after the announcement that came in from the Rakesh Gangwal group indicating that the EGM announcement will happen at the end of the month. Now the dealing room view on Indigo is that change in articles of association probably will mean that either some bit of corporate announcement on promoters exiting or some foreign infusion coming in or some domestic infusion coming in probably is the way ahead. So seen as a positive that it's moving in the right direction in the midst of the promoter tussle. So Indigo is something that's been actively watched about. The other one is Biocon. Today because of the strength in the rupee, of the dollar against the rupee, a lot of pharma and IT stocks have done well. Biocon one for one is doing well. There's a buzz of a potential corporate announcement that probably will come in. It's up on very high volumes. Almost 5 million shares have already been traded on the counter. So that's something that we're watching out for. And a small company, at least on the price front, is GMR. Of late has been doing well. It's up almost 4.5%. So that's something that's been spoken about. Some of the HNIs are accumulating the counter. Buzz also in terms of some bit of announcement on the airport division is ruling the roost in some of the dealing rooms. So these are the stocks that's been spoken about.
All right, Darshan, thanks a lot for joining us with that list of stocks. But some of the other counters which are doing well, pull up Max Financial, that's touched fresh 52-week high in today's trade. And remember, we've been highlighting the stock for you for a really long time. It's at day's high. It was trading in the red, I think, for first half of the session and some recovery. Seeing Chandan on the charts, it's there in the derivatives market as well. Are you spotting any trend, and would you advise someone to create longs now at these levels?
Yeah, perfectly. In fact, this looks quite promising, and we have added this stock in our most 2020 top pick for 15 to 20% higher target in next 2 to 3 months. We believe this outperformance could continue, and stock already started to give the positive momentum with open interest addition of around 7 to 8%. However, on positional basis, we are looking 650 kind of level, but one can look for the BTST and immediate trading point of view by putting stop loss of 550 for an upside target was 585, 590 level. So structure looks quite promising, and one can look for 4 to 5% movement in next coming trading session in the MFSL.
Okay, even at these 52-week higher levels, Chandan advises to go long here. But the other one which is weak is Asian Paints, and this one I think has been weak since last few trading days, even at a time when the markets were scaling higher. So it's down almost 2.2% in trade. Chandan, this one on charts, Asian Paints, an outperformer last year, trading somewhere about 1750. Is it headed? Is there more downside left for Asian Paints?
Yeah, I think now the stock started to find hurdle at multiple supply zone of around 1830-35 zone. We have noticed that whenever price comes near to the same, the stock fizzled out its momentum. In fact, in the last week it made high near to 1826 and now started to form lower highs, lower lows even after the market recovery. So which indicates that some sort of nervousness is clearly visible in the counter. It used to be one of the outperformance counter in last couple of years. If I look at the yearly chart on year-to-year basis, the stock was moving upwards, but now profit booking is clearly visible. So short-term trend has turned to negative. So one can look at decline to a 1700 to 1695 level in this stock. Until it remains below 1800 zone, the stock has potential to go down to a 1700 and lower levels.
Yeah. Well, yeah, that's the call on some of the paint companies as well, and pretty iffy. Today, it's been a rather lackluster day in that you've seen IT companies do well because of the risk off. Some of the pharma names, a couple of them, and very defensive bent to the market, and some of the more aggressive names having gone down in the session today. There is a certain pullback in the Bank Nifty, though you have to say that even the Bank Nifty is not trading currently at the lowest point of the day and has bounced back a little bit. Deepak, we've discussed so much of some of the others. I want to go back onto how do you view some of the capital market linked names, and off late we've seen some of the brokerage related businesses or brokerage stroke plus AMC in the case of Motilal Oswal start to do well. I'm sure you looked at these businesses. Is there merit in chasing them, or even if you want to buy them, wait for the valuations to correct a bit before you go out and buy them?
So I think, there's been some activity because large investors, some of them have actually picked up some stake. This is not exactly, something that I think the brokerage business is going to get squeezed out of margins because, but they have a temporary tailwind in the fact that a lot of smaller brokers will go bust because of the new SEBI regulations around lending, what they can't do with customer pool accounts, with the operational changes, with requirements of much more disclosure and upfront collection of margins rather than giving a lot of intraday leverage, which they used to. So a lot of the online brokers don't do any of this stuff. So they have been, kind of better at this in terms of already doing this in a better way. But some of the names that have gone up today continue to have an overhang of the old system. So they did do a lot of lending. They did do a lot of provisioning of intraday leverage. And I guess they might find it easier to get their act together. The smaller brokers might actually end up going bust and transfer some of their customers, therefore, into these, whether it is IFL or whether it is Motilal. I think a lot of benefits will be reaped there, at least to some extent. But I think margins are going to get squeezed because regulatory costs are going up. The brokerage transaction framework, which used to earn them a lot of money earlier through interest costs, including in ISEC. If you see the ICICI Securities margin funding exposures last year, they also had quite a bit of money in that segment as well. And I don't think it's the right time to assume that just because customers will move to the larger players, the larger players will make a lot of money out of them. I think margins and revenues will get squeezed, and with the presence of online brokers offering next to no brokerage, I think this space is in for it to be taken over by the younger, more tech-savvy players compared to the ones that are listed and are slightly less tech-oriented and more people-oriented in nature. So I'm not kind of jumping into this space, though we do have some investment in AMCs, which we think is a great business to be in because we are an AMC ourselves. Why would we not be bullish about it?
Okay, so you're comfortable holding on to the AMC investments even at the current levels or even putting fresh money to work? They're two listed AMCs essentially, right?
Yeah, I mean AMCs, we've got a position primarily because we like the business model, and it's a consistent long-term earning business model, both whether it's RAM or HDFC, and I hope more players come in. But there is of course extreme overvaluation. I don't doubt that at all. So I wouldn't recommend other people buy it just by listening to what I have to say. I think you have to value the business individually, and we've picked up stakes at much lower prices. So we're comfortable holding on or even booking some profit whenever we have to. But I mean, anybody buying now will have to take a fresh look at whether they think that this business is worth holding for a longer term and position their portfolio accordingly. I'm not going to suggest that everybody buy this, but I mean, I personally am bullish about it. So I should disclose that I have an interest.
Okay, and why not be bullish on your own line of business, Deepak? Atnam and both you've seen HDFC, AMC giving good returns, and this year I think we'll get more players getting listed in that space. But just few minutes to go for markets to shut shop. Chandan, your top closing strategy, be it in the form of BTST or STBT for Monday's trade?
Yeah, one can look at the JK Cement. We are quite positive in the counter. We have given the same in Murat Quick. The stock has given a decent breakout and significant volume is clearly visible in the counter. So those who are looking for known FNO counter can look at the JK Cement. The stock is now trading near to 1285. Put 20 rupees lower is a stop loss of 1265. And here the stock has potential to move towards 1330 level. And second trade may be the MFSL, which already we discussed, where we are looking for 580 kind of zone and can be traded as BTST as well.
Okay, JK Cement and Max Financial both are Chandan's BTST. Oil India is up and about, that's up about 2%. Chandan, very quickly, would you trade Oil India at these levels?
Yeah, Oil India can be traded here. The stock has bottomed out after the formation of lower highs, lower lows on the weekly. We have seen surge in the volume with buying interest in other oil and gas company. So expecting positive momentum, one can put support near to 153 for an up move towards 160, 162 levels.
And any banking stock you would like to short? PSUs are down. We've seen RBL Bank also, by the way, correcting after surging 6% yesterday.
Yeah, so I think one can look at shorting at the PSU banks. Comparatively, I'll be having the shorting opportunity in Canara Bank because the stock seems to getting some pause in the positive momentum which it has seen in last few days, and below 220 it may open the downside. So either one can sell here or can add more below 220 for the downside target towards 210, and now selling stop loss could be near to 228 level for the selling opportunity in the Canara Bank on the downside.
Okay, Deepak, last question to you. Government's thrust on infrastructure, how do you play this space? Cement has not done well in the last year when a lot of market experts were betting on. Can this year belong to them? If yes, are there any favorites here?
Well, I think cement's quite richly valued for the most part. So, if it doesn't correct, it actually doesn't mean anything at all. But, the September quarter results were obviously dismal because during the rains, nobody, really transports or buys cement. But I think the December quarter's going to be looking good. We're seeing some new project movements happening. So I think here the largest and the more integrated players will be the ones to benefit the most. And as a disclosure, we do own some. So, but the real thing is that, if you're looking at an infrastructure push, there are a lot of infra companies by themselves, whether they're road builders or water project developers. They are actually valued at now single-digit PE, so they might be a better bet in terms of a risk-reward ratio compared to anything else. So you see the likes of KNR Con, again, we've recommended that, we own it. They have been battered down from their highs, but they've maintained a very strong balance sheet, and they continue to be able to take their projects, find buyers for them. So they have a semi-conversion of a HAM project to an EPC project because they have some revenues that will come in because they have pre-sold some of these projects. So there's more happening on that front in the infra space than I think a pure play like a cement. If you're looking at cement, I think you look at the largest players, whether it's Ultratech or one of those. So I think those have more potential because if the infrastructure story recovers, it will be across India, and you want a pan-India player because cement is quite local. You want plants in all locations possible. So those might benefit more from this thing perspective. But remember, again, valuations are very high on the cement space. So even a 10-20% correction will just bring them to more normal valuations. So, I don't think I would recommend this to players who are not really in for the 5 or 10 year period.
Point well taken. Deepak, Shenoy, I take a moment to thank you for joining in today and giving us your perspective. Really appreciate your time. Chandan, request you to stay on. We'll just take in one closing thought from you post-market closing. But here's how the markets are shutting shop today. And oil, the principal reason why the party of yesterday got disrupted. Now, whether this extends itself would depend on the events that happen over the course of the next few days. But for today, we've ended in the red. And I dare say, the small caps still have done okay, but the mood has certainly been soured. Should come up, the mid caps and the small caps, and relatively better, as I said, the small cap space, though it is ending in the red as well. The market breadth might have just narrowed or been in favor of the declines now. We'll get to know about that in a bit. I'll talk about the large caps first and what's happening at this end of the market. A clear move towards safety, defensive. So TCS, HCL Tech, Sun Pharma, Infosys. GAIL had some news bit to it as well, but again, a bit of a defensive bet. GAIL has said that they do not owe anything to on the DOT claims. Tech Mahindra, Wipro, Reddy's. Clearly, the defensive bent of the market being seen today. What is not done well, a lot of newsmakers and a lot of specific market movers. So, Z down about 5.5. So, 2 days on a trot now that's gone down. Bharti Infra has some losses to itself. Oil-related names, so you've autos, paints, etc. have all gone down. So Asian Paints, Eicher, etc. But the main culprit today was banks, and look at what's happened to some of them. Axis Bank and SBI amongst the losers in the top 10, but the others like HDFC Bank and the others too lost a fair degree of ground. So not the best of closes to the week. We started off the year very well in the last 2 days. Somehow it's just gotten a bit disrupted now.
Yeah, Neeraj, after yesterday's stellar rally and the sort of market breadth we saw, one would have expected follow-on buying, but clearly today was the day when the geopolitical factors weighed on the markets. But still, there were some gainers, so let me start with that. Talbros Automotive from the mid-cap space had a good session today, and the stock did witness good amount of buying interest, and it's actually closing off the day's high, but still with good amount of gains of 13%. Second day where Zwari Global witnessed buying interest. Yesterday the stock was locked in upper circuit with gains of 20%. Today also it's closing with gains of 14%. And right from the word go in the morning when the markets opened weak, you had Reliance Industrial Infra inching higher, and the gains were sustained throughout. In fact, it's closing with 20% gains upper circuit. It also touched its 52-week high today. And Indigo, as we were talking during the show as well, off the day's low, opened lower but picked up momentum after the release coming in from the company. GMR Infra, after a while, it was also one of your top F&O gainers today, so 4% higher for this stock. And IT Tech witnessing good amount of long positions on the future side, and of course this one's been moving on good amount of volume in the cash side as well. Remember, the company just announced buyback few days back. On the losing side, PSUs were down, especially the PSU banking stocks. So Bank of Baroda down about 3%. You had Punjab National Bank also seeing selling in today's trade, so 2.5% lower for this one. DLF, now these are the outperformers. Maybe you're seeing some bit of profit booking. That was down about 2.5%. LIC Housing didn't have a great day. RBL Bank, which rallied in yesterday's session, saw some profit booking or cooling off in today's trade, 3% lower here. And finally, Apollo Tyres as well. Remember, yesterday, second half, we did see the tire stocks moving up, but this one also losing steam in today's trades, 3% lower for that. In terms of markets, Neeraj, we couldn't touch the 12,300 mark, but for the day, we've defended 12,200 at least.
Yeah, thankfully for that. But I'm interested in the breadth, Nameed, because we were still positive when we started the show. Let's see if we've dipped into the negative.
Yeah.
Yes, we have. For the market, just marginally, still close to 1:1, but certainly have dipped in the negative today on the market breadth.
Yep, when everything was trending lower today, you had the VIX going up. VIX, I think it's up about 10% or 11%, yep, 12.6, and it's moved from those levels of 10.5 to 12.6%. Not surprised on the day when you had geopolitical factors weighing in, and usually because of these factors, you see these sort of significant moves in India Volatility Index.
Yeah, also the volumes should come up on your screen, and let's see if we've fallen today on high volumes. Well, at par with yesterday's volumes on the cash side at least. And the F&O volumes, well, obviously lower than yesterday, but now we're making it a habit of nudging the 10 lakh crore mark almost on any given day.
That's right. I think it's just when we start a new monthly series, the volumes are muted. Otherwise, because of weekly expiry, F&O volumes, average volume is in the range of about 8 to 9 or maybe 10 lakh crore also on most of the days.
Yeah, and the contributors will come up on your screen. Banking names, the HDFC Twins likely to be up there, and SBI and Axis. It's all banks which have pulled the markets lower today.
Thanks to the ID pack, we defended 12,200, maybe because of that. TCS, Infosys both together contributing 20 points, and Pharma Tech Mahindra also ending the day at least in the positive. On that note, let's take Chandan's closing strategy then. Chandan, would you use these dips to create longs, let's say tomorrow also if you get an opportunity, or would you wait by a certain level?
See, first I'll comment on the India VIX that surged by 10%, and now we are back to 12.67 level, which used to near to 10 just couple of days back. So we believe the volatility index will jump by around 20% are likely to get the wilder swing in the market after the consolidative range. Technically speaking, the Nifty has been consolidating in between 12,100 to 12,300 zone. We have not seen any decisive range breakout. So till the range is not broken on either side, we will continue to be with overall major trend that is positive. So I think if 12,150, 100 is broken, then only the sentiment could be changed. Otherwise, one has to continue to be with trading range. So as of now, till the 12,150 is not broken, we may not change the sentiment or the view, and looking for a consolidative move with the upper band of 12,300 in the Nifty index.
Chandan, just one last question on MCX, which touched 52-week high today. The stock was up about 4%. Do you see any trade here on the charts for Monday?
Yeah, we are quite bullish on MCX. The stock has given a major consolidation breakout on the weekly scale that is similar to its pole and flag pattern. Today's volume is much higher by 10 to 12 times than the regular volume, it is decisively surpasses multiple hurdle of 1220 zone and holding above the same. So now the way it is surpassed the 1200, 1220, one can use that level as a support, while on upside we are looking for 1275 and then positionally 1350 kind of level. So one can look for trading over 1 or 2 days, or in fact one can look for the positional for 10 to 15% movement in the MCX.
Okay, Chandan, we leave it on that note. Thanks a lot for joining us and have a good weekend.
Thank you.
Well, on that note, it's a wrap on this edition of Countdown. Goodbye from Neeraj, my side, and the entire team. You can stay tuned to BloombergQuint. Market Wrap comes up next.